Hey traders, hope you're doing great. My name is Steven in case you're brand new, and today I want to talk to you about something that I hope can fill the gap in the Forex industry. Most Forex videos, including a lot of my own, are trying to help you go from wherever you are to becoming profitable. But something almost no videos do is tell you how to fill the gap between when you become profitable and gaining an account size that's big enough for you to actually live off of with your trading. There is a gap there. It's something that I experienced at the beginning of my trading career. And if you look at the screen, you look at the two numbers on the bottom of the screen that are underlined in red, these two numbers were the return on investment, the ROI of the same exact trades, using the same exact risk management plan and over the same exact period of time. But as you know, there's a huge difference between $36,000 and $200,000. Well, the three tips I'm going to share with you today are the only difference between these two traders. And that's what I want to show you, is how to significantly decrease the amount of time it takes you to grow your capital to a point that you can actually live off of it once you become profitable. So whether you are a complete beginner or someone that's already a profitable trader, this video will benefit you if you ever plan to become profitable, which I hope all of you do. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. Welcome back, and let's go ahead and get started. Again, these are three things that are going to dramatically decrease the amount of time it takes you to get to your goal account size where you can actually start trading and quit your day job. Speaking of, what is the first thing you think about when you think about profitable trading? For a lot of you, and I know this is how it was for me, whenever I first started trading, I thought about quitting my day job. I thought, man, as soon as I'm profitable, I'm going to quit this day job and I'm going to start just trading for a living. Well, what if I told you the first way to significantly decrease the amount of time it takes you to get to your goal account size is to keep your day job? And I know that doesn't sound attractive or awesome, but the long story short is that when you first started trading, and even when you first become profitable, let's say you've been trading for a year and you're now to a point where you're consistently making money every month, even if that's the case, chances are you don't have a large enough account size in order to trade for a living. So the main goal of all three of these tips is going to be to get you to the point of having a large enough account to trade for a living. And the first step in doing so is to keep that day job. You don't want to have to withdraw money from your trading account in order to pay your bills at the beginning of your trading whenever you don't have enough money to even trade for a living in the first place. So that's why the first tip is to keep your day job even whenever you become a profitable trader. Let's move on to number two. Number two, do not, I hope I drew that right. I may not have. I'm having to look on my chart to see how to draw ends. I did it right. Oh my gosh, I'm dyslexic, in case you didn't know. Do not withdraw your money. Do not take money out of your account. And you'll see why in just a second. We're going to go through the math of how one trader A, got a $36,000 return when trader B got a $200,000 return. One of the biggest reasons is because trader B did not withdraw the money from his account. Withdrawing money when you're trying to grow an account cripples your ability to grow that account in a fast way. Compound interest was named the eighth wonder of the world by Albert Einstein for a reason. The only way to let compound interest take hold and take effect in your account is by not withdrawing money. This is one of the pivotal mistakes that I made at the beginning of my trading career. I constantly thought that I needed to reward myself for doing well. So I might have a really good month where I made like 10% on a $10,000 account, and I would take that $1,000 that I made and go spend it on something that I wanted. I wasn't in the right mindset of growing my account as fast as possible. And once we become profitable traders, our next mission should be to grow our account as fast as possible for us to be able to quit our day job and start trading for a living, which I imagine is your goal. I know that was my goal whenever I first started. So number two is definitely do not withdraw your money. What about number three? This one's going to sound crazy, but add to your account. You want to constantly be adding to your account at the beginning when you first become profitable, because that's just going to help you get to your goal account size much, much faster. So adding to your account is obviously a great way to get there, and obviously a great way to decrease the amount of time it takes to get to that goal number in your account so you can quit your day job and start trading for a living. Now what I want to do is take a look at two example traders, one who is making the mistake of quitting his day job, withdrawing his money, and not adding to his account, and the other doing the opposite and taking all of these steps in order to increase his account size as fast as possible. And we're going to take a look at the comparison of the two returns. So on the screen, you can see that we have trader A on the left and trader B on the right. We're going to assume that they both have the same exact situation. They both have a starting balance of $10,000. They both have a job where they make $4,000. Their expenses are $3,000. We're just using very generalized numbers here. And that means that their extra that they have left over at the end of every month is about $1,000, and their average return is 10% per month. This is the same across the board for trader A and for trader B. And the reason I picked most of these numbers is because $50,000 a year is an average income for America. 4K a month is around that price, around that amount. And then 3K a month is average expenses in America. So that leaves most people with an extra about $1,000 at the end of every month if they're budgeting correctly. So with this being the case, let's take a look at trader A. Year one, trader A takes his $10,000 account, turns it to 12K, or gets a 12K return, turning his account into a 22K account. Now, he withdraws every month all of his profits. So after his first year, we're going into year two. So trader A quit his day job, which means he's having to use all of his trading money, which means he's having to withdraw all the money, which also means he has no money to add to the trading account. So at the end of the year one, even though he came out very profitable, making a 12K profit, he now has to restart with $10,000. What do you think happens in year number two? The same exact thing, right? So then he turns that 10,000 into 22K again, and in year three, he turns 10,000 into 22K. With this being the case, what was the total return, the total ROI that he got? Well, he made $12,000 for 3 years, meaning that he got about a $36,000 return. He took a starting balance of $10,000 and was able to return $36,000 from that $10,000 initial investment. Now, what about trader B that takes all three of those things we talked about earlier seriously? He keeps his day job. He doesn't withdraw money from his account, and he adds as much as he possibly can to his account every month. Let's look at year one. Year one, he makes the same 10% per month. So he goes from 10K to 12K based on the return. But remember, he's putting every bit of his extra money into his trading account so he can grow it as fast as possible. So in year one, he didn't only return 12K, he also added $12,000 to that account, meaning that overall added to the account's been $24,000. If we then add our $10,000 to that, his account size at the end of his first year is $34,000. So here's where compound interest starts taking place. Now in year two, he's starting with $34,000. And remember, we're using the same return for both of these traders, and that's going to be 10% a month because math is easy with 10% per month. So at $34,000 account balance, what does that mean? That means that he is now, trader B, is making $3,400 a month, whereas trader A was only able to make $1,000 a month because of compound interest. So now let's calculate that. So in year two, from his $34,000 starting balance, he has returned $40,800, we'll just call it 40K, and he's added 12K to that as well. So if we add all of these up, you have 74,000 plus 12,000, which is gonna be $86,000. So at the end of year two, trader B's account is dramatically higher than trader A. And it's because he allowed compound interest to take effect. He also added to his account every year as much as he possibly could, kept his day job so he could do those two things. So let's talk about year three. In year three, because of compound interest and adding to his account, trader B now starts his year with $86,000. Now if he's averaging 10% per month, that means he's making $8,600 a month. He's a six-figure trader right now. But let's say he decides to keep his day job. His goal was to be over six figures in his account before he quit his day job. So here we have 86K, meaning that he returned $103,000 in year number 3. And remember, he's still adding $12K per year by taking all of his extra money and putting it into his trading account. So that puts him at a return, including the money he's added in, to about $115,000. And if you add that to his starting balance of $86,000, he is now, over the course of 3 years, returned well over $200,000 just by following these 3 very simple practices, which are to keep your day job once you become profitable, not withdraw your money, which is a big mistake I see a lot of traders make, and that I made on my own at the beginning of my trading career. Withdrawing money just completely discounts compound interest. And if you use compound interest correctly in your favor, it can dramatically decrease the amount of time it takes you to make money in any financial market. Also, Trader B decided to add to his account every month as much as he could in order to increase his starting balance. So look, I know that this video probably wasn't as entertaining as most of the videos that I put out, with charts everywhere and teaching you things about technical analysis or about trading psychology or risk management, but this is something that I don't think is talked about nearly enough, and that is that gap between becoming a profitable trader and actually being able to trade for a living. And I know this is a video I wish I would have been able to see or someone would have made for me to understand that going from a small account balance to a larger account balance is going to be just as much about the way that I budget my money so I can add to my account and keep myself from withdrawing from my account as it is about the strategy I'm trading or about the technical analysis I'm using or about the way my ROI from trading alone is coming through. Now, in this example, I use 10% as the example ROI. That's not a super realistic return, especially for beginners. 10% per month is a very large return in financial markets, especially for swing traders, which is what I do. Day traders, it may not be. As a day trader, you can probably make a little bit more, but as a swing trader, that's a pretty heavy return. So I'm not saying that 10% a month is something realistic. What I'm doing is simple math to help myself so I don't have to use a calculator all the time. So 10% was used for that reason and that reason only. Final takeaway for this video, I want you to think about how dramatically different these 2 returns are. We're talking about a difference between $36,000 and over $200,000 for Trader B. And the only difference that these 2 traders had was 3 very simple things, right? It was Trader B kept his day job. One of the reasons he did that was so he or she could use compound interest by not having to withdraw money to pay his bills. And also so that he could add to his investment account as often as possible and as much as possible in order to increase the size of that account dramatically over a short period of time. Taking these 3 steps in your trading once you become profitable, no matter what your return is, no matter what your starting balance is, no matter how much you can add to your account each month, it doesn't have to be $1,000. The formula remains the same. And no matter what your situation is, you will get there faster if you take these 3 steps. It's guaranteed. Now, do not take these steps if you're not profitable yet. Obviously, keep your day job if you're not profitable. But if you're not profitable, it's not like you need to worry about trying to add to your account. If you're not profitable and you don't have a trading plan, you probably need to go back to square one and start learning how to trade. But I digress, as that's a little bit beyond the scope of this video. If you enjoyed this video, go ahead and click that like button for me. Go ahead and subscribe if you are new. Hope you had a great trading week, and I hope you trade green. If you did enjoy this content, be sure to comment below if you want me to do more content like this, talking more about that gap in between, going from someone that's now profitable to someone that can actually trade for a living. I'd love to do more videos on that if it's something you guys find valuable, so be sure to comment below if you do. With that said, I'm going to end this video here, and I will talk to you in the next one. See you soon.